All right, welcome back. This is going to be July 2025 update for living off an income portfolio journey. For those of you who join us for the first time, this is a journey where I try to live off an income portfolio full time, no other income at all. Me and my wife quit our job last year in June. It's been about a year and 1 month since we quit our job and living off our income portfolio full time. I started this series because back when I was researching these type of investing, there wasn't a lot of data around this area, so I thought that I want to be the data that I was looking for at the time. A lot of data are kind of involved around accumulation phase and not too much on the withdrawal or drawdown phases. So I thought that I want to do that. Anyways, let's get right into the number. Before that, I have to tell you that I was really dreading making this video. Not because the numbers are bad or anything, it's because it's so hot. And then in order to start this video, I have to turn my fan off, I have to open the window, and the sun's glaring, and it's just really hot right now. Hope you guys are doing well. Um, the past month been quite a roller coaster. I mean, it's only been 30 days, but it felt so long with so many things happening. All the AI news and all the Tesla news. Like we went through some because if you've seen the video before, we actually hold some amount of Tesla exposure. So last month we had what Elon Musk and Trump spat part 2, 3, and 4 back to back with the third party introductions and all these things. It was quite a wild ride. I mean, I like Tesla as a company, but man, this extra drama it just seems so unnecessary. But anyways, let's get to the number. Let me switch my screen here. Okay, so this is numbers starting today. So far, our portfolio doing really well. We touched a million briefly today, and then kind of come back down. I think it's probably something happened. I think there was like some Senate voting today regarding some stuff. I think CPI number came out today. Actually in line, I think we at about 2.7% CPI month over year, month over month. I don't remember. 2.9 for core. I think the only thing that really held up the CPI is probably the housing. So I think that we are going to be expecting some rate cut later on this year. I didn't really look too deeply into it. I'm not like fully update all the time. But I think we're expecting about 2 rate cuts, which is going to be good for tech stock, which we have a lot of exposure into, and also our preferred share. I think overall, as rate come down, or a lot of these are kind of hang on the expectation of rate, right? It's not exactly reactionary. They are based on expectation because it's going to start moving way before the rate actually come down. So if you're not familiar, these are kind of like this part of our portfolios are more like fixed income. So they're very sensitive to how the rates are going to be performing. Anyways, we didn't make any change in the portfolio last month. The only change is we do sell some cover call on Tesla that we held starting from last month before. We do have some exposure on Tesla prior to that. We do sell some put here and there, but nothing excessive. Just a little bit here and there. If we see a big dip or I see some good opportunity, we use the margin account over here that we would sell options on. The margin balance is a little tricky, right? Because we do sell option on this account. And then how TD works is that they don't show your value. So it's not like a good full on picture of how much the portfolio worth. In reality, it's a slightly higher than 260 by like about 1,000 or something like that. So I just keep it like this for now. But if this number swings a little bit kind of odd, then that's basically why. So we withdraw 4,027 last month. Everything's performing really well. I think this margin account has been performing exceptionally well since the start. I think we started investing heavily into this account. I think in 2023 so far it does really well. Anyways, we had 998. Let's go to the VFV test portfolio. So basically this is my portfolio, right? And at the time I want to see how the withdrawal strategy would perform if I were to do it on the same on VFV Portfolio, XEQT, HYLD. So I want to see a run parallel experiment to see how they would perform in the scenario where I withdraw more than 4%. So this is a VFV portfolio. VFV hasn't recovered as well. Partially is because it is not currency hedge, right? And as we all know, US dollar been kind of coming down. So it really lags. It really kind of put a drag on VFV quite a bit. So we withdraw about 21 shares from VFV last month. Right now the total is sitting at 952. and XEQT. Also, probably one of the ETF that is quite popular. Personally speaking, prior to running this experiment, I was expecting XEQT to underperform VFV by quite a bit, just because it is a little bit very diversified globally. It's good and bad, right? Because a lot of growth are sometimes concentrated on like a large cap US or like certain area. By being overly diversified, sometimes it's a double-edged sword. You lower your beta, but you also sometimes lower your growth. But this one actually performed really well, beating VFV by quite a bit this year. Again, I want to remind that because this experiment has been running for very short time, right? It's a good data, but I wouldn't draw any like a solid conclusion from it just yet because it is only one piece of data. So this is XEQT number. Next is HYLD. This one has been quite popular among income investing. Basically, it's all-in-one cover call US based listed in Canada Stock Exchange. I know it's a little bit of a mouthful. This one at 950K. This one also beat my expectation because prior to running this experiment, I would expect HYLD to, nowhere is going to be anywhere near VFV, but it actually keep up okay. Like VFV at 952, HYLD at 950. It actually at one point surpassed VFV by a little bit. I know that the currency differences also play a part in HYLD kind of performing a little bit better compared to VFV. So HYLD holding up quite well. So now let's take a look at the data side by side, okay? So as you can see, we starting tracking the data on November of last year, even though I start living off it way before then, but I didn't think to start tracking it. Sorry about that. And we have the withdrawal amount over here every month. We try to do it around the same time every month, but I know that it's not going to be perfect, but we're doing our best here, okay? So the starting balance of each portfolio is 932. And then sitting at right now, these are the number. Let me just make this a little bit bigger here. Okay. This is the amount total withdrawal so far, 38,357. And then as you can see, some nice graph over here. Our portfolio actually do really well until the April dip, of course, right? And you can see like a sharp drop coming down here. The cool thing of being overly diversified is XQT actually drop a lot less than others. And that actually, if you were to draw like a average graph here, you can see HYLD going to have a lot less volatility. I know it's not by much based on this one because the April thing was such a big bomb drop by Donald Trump there. So far, HYLD and VFVs are very close neck to neck. This is actually a data from last Friday, so the number might be a little bit different from what we see today. Our portfolio actually performed quite well right now, just surpassed XEQT. But again, it's very short time frame, so don't draw any crazy conclusion from this. Okay, so now that data is done, this is basically more like a goal that I want to get done this year. Read book 512. Honestly, I haven't done much reading books. It's been so hot. I just want to sit by the the fan and just watch YouTube video and just not turn my brain off for a little bit. Try a new restaurant, Duolingo. This one's progressing slowly but surely. We did try to cook many new dishes. So this one's we kind of like beating expectations over here. Refilling emergency fund. So last year we actually went to live in Asia for 6 months, and then we really depleted our emergency fund by quite a bit. And then back in April we did take a chunk of it and then put in the market because it has such a big drop. So we are gonna slowly building it back up now that we're living in a little bit more like a lower expense environment. Rewatching Commanding Heights. We haven't done any of these at all. It's a documentary about economics during like the 1900 period that I really like, so I kind of want to rewatch it. I haven't done any of that yet. Fishing eBay listing, I don't want to talk about it. We haven't done anything. So the next section I want to talk about, so basically I do post this update on Reddit as well, and then I do post them a little bit earlier than video. And then the reason I want to draw to this conclusion because I had some good question by username 3junior. So we had a couple questions regarding our experiment here. So I want to kind of address on this video as well. I did answer him already. So first question for the VFV chart, why would you, actually let me just make this a little bit bigger, okay. For the VFV chart, why would you sell end of the month? Are you trying to just pay capital gain and avoid dividends? So I think what he means is that because the VFV has X dividend date, I think around end of the month, and then by selling it, I actually not getting the dividends. So how my VFV portfolio works is that I actually average out the dividends, and then and that this combined with the cash balance, and then I will deduct it from the amount withdraw per month, and I will sell that amount of shares. So this way, I have a formula right here, right? So total distribution minus cash interest minus VFV dividends. So VFV dividends actually spreading out to 12 months. So this way, it actually edge out a little bit better for the VFV portfolio compared to actually tracking the dividend, because you have more shares, even though very slightly per month, to kind of grow. Okay, so next question, does 900K-ish include the margin, or is it excluding margin? So I think he's talking about, sorry, let me just lower this a bit, this amount right here. So as you can see, this is the margin account portfolio. 375 is the total, then margin taken out, and this is the net amount. So basically, the 900K is net of margin. Third question, what do you anticipate your average yield to be on this portfolio? Right now it seems like 4 to 5%. So the average yield is actually about 9% right now, but I am living off about 5%. So I look at the total yield as like an income, right? You don't want to be spending every income you earn, because that's basically living paycheck to paycheck. Just treat it as your job income. When money come in, you're gonna put some save, you're gonna save some, spend some on living, spend some paying down debt, like the margin expense over here. So it's 9%, but I'm leaving off about 5%. What do you expect the average CAGR to be excluding amount you pull out? So he is asking about, like a cumulative growth rate of the portfolio, what I'm expecting to be. So I'm expecting about 8% growth rate year over year, excluding the amount pull out. This is basically how much you expect your portfolio to grow total net per year. 8% is what I'm expecting. I know that dividend yield is much higher, but of course, yield is not equal to growth. So I'm expecting 8%. How long until you can collect CPP OAS? You're not from Canada. This is basically like your pension, Canada pension plan, OH security. Probably about close to 30 years. It didn't work too long, so I don't expect my CPP and OAS to be a lot. But every dollar count, so it will definitely help alleviate some of the withdrawal. But by then, I don't know. I don't think these are inflation adjusted, so I don't think it's gonna make too much difference. And sadly, by then we might not even have it. You never know. So I don't want to expect on them too much, but the answer is about close to 30 years. What do you expect the average tax rate to be? Okay, so let's go to BC income tax calculator here. I'm just do a number here for you. So as you know, core holding, it's in register account, so no tax. Okay, so we have 48,328 over here, and then 32,302, and then minus the 6,900. And then you're gonna have to minus this part over here as well, because these parts are 15,422. These are actually eligible dividends, so they are taxed differently. Okay, so eligible dividend 422, and okay, so I'm gonna make assumption that this amount right here, it's gonna be fully capital gain. In reality, some of them is gonna be return of capital, sorry. So it's gonna get taxed a little bit differently, but let's assume worst case, not worst case, but assume a base case that they all capital gain. Okay, 58,288. 58,288. Okay. So the tax rate is going to be about 2%, which is honestly not much. This year I'm expecting to be more, because we did sell some positions, and then we did net more capital gain. But generally, this is going to be the tax rate that I'm expecting. Of course, like this is 2024, so I don't know what's going to change here. But according to Wealthsimple tax, that's basically what it is. I don't think this is going to make much difference. Yeah, same. Okay. So yeah, so that's the amount that I'm expecting. Okay. 7 questions split between RSP TFSA. This is already answered. it is the goal to have more than your starting balance when your end date comes. Okay, so yes, I do expecting this portfolio to last, and then I kind of gear every picks toward that direction. I don't expect it to grow explosively like 5x from here when I turn 65. I'm expecting it to be more than I started. But if I expect CAGR to be 8%, I withdraw 5% per year, then your net gain should be about 3%. So it will grow over time, not by crazy amount, but yeah, I expect it to grow over time. And then as I grow older, I might my expense might change, and I might revisit all the expectation again. But that's basically my expectation. I think there was another question here that I want to look at. Okay, let's see full discussion here. Another question that I think was quite good. It's by the user Zhang Fei. If you were to do it again from zero to hero, at what point would you open a margin account after you max out your contribution on your register account? Okay, there's some really funny story about margin account. I actually tried to open a margin account at 19, and I was turned down, rightfully by TD Bank. um, my marketing teacher back when I was in high school, I was in class and he was like on computer. During downtime, I went to talk to him and he was looking at Yahoo Finance at the time. So I asked him, oh, you trade stock? He's like, no, I trade options. And he was telling me all about how option works. Imagine 18-year-old being exposed to this, okay? So then he was telling me all these things, like, oh, you can use a small amount to control a larger amount of shares, XYZ. His whole point wasn't to get rich. His whole point was to, okay, I'm gonna quote him, okay, to take hot granny out on dates. He was like a 50, 60-year-old teacher. He just basically keep making jokes that he wanna make some extra money to take out his wife on a date. So I thought it was very cute. But anyways, he was talking about option, and then I was very convinced of like what I can do with it. And then so I went to TD Bank, but like I want to open a trading account, and then I want a margin account. Of course, I was rejected. So then that was put on hold for years. I didn't get margin account again until I'm like 30. So to answer the question, it really depends, right? If I know what I know now, I would open them very early on. But if I was just starting out learning, I would not recommend it. So my answer is, it really depends. Knowing what you know now, if I know what I know now, probably early on. If starting over, not knowing what I'm doing and learning as I go, then probably toward the very end, like very much later or never. I mean, this one you kind of have to know yourself, right? Because margin is a double-edged sword. Sometimes it could make you, and a lot of time, more time than not, it could ruin you. So wouldn't recommend it. I follow Wall Street Bet, not that I gamble like that, but I've seen many bad things happen to people, so not really recommended. So yeah, anyways, that's about wrapping it up. A little bit long video today, but thank you for watching. I'm gonna turn back my fan and gonna go lie down now. Have a good day. Hopefully y'all have a good month. I'll see you next month.